Hello, everyone. Small crowd tonight, coming close to Christmas here. So definitely expecting less people in here. Glad to see you both. It is gonna be our only price action review this week. Not gonna lie to you guys, did not even look at the charts today, so I will be reviewing this as an analyst. I did not trade it at all today, and I won't be trading right up until January 6th. So I'm also going to be skipping that first week, which is like half and half. We have, um, I think it's Tuesday or Wednesday that we have our the New Year's bank holiday. So I'll be skipping that week entirely and coming back to the charts, coming back to trading right after it. So on that note, what did we see happen today? Well, exactly what we were looking for, right? Just in general, of course, we're going to be trading within this range, but we're going to dive into this fair value gap. But more specifically, we did discuss, and I said that this week I'd be focusing more on time-based framework, right? So time-based liquidity. What do I always look for? London range. So if we look at the range from 2 to 5 a.m., we're getting right into it today, by the way, guys. Definitely a little bit quicker than usual. But if we look at the London range and just the overall daily context, what happened? Well, we consolidated, right? After a large expansion right on the open, which statistically speaking, when that happens, we're going to fill this gap. Very high probability of the time. But we accumulated on open, manipulated on the short term right here. But what was missing at this level? We had no SMT. Due to that fact, I was waiting and seeing this full down move as a manipulation, and we have additional confluence by seeing that London has taken out the lows overnight. Well, we have taken out the London lows before 9:30 open, which is this orange line you see right here, left the highs open, which means what? Our targets is London high. This is a time-based framework from ICT's One Trading Setup for Life, the London RAID framework. Very high probability. Additional confluence, we left midnight open. Open, pretty much. Midnight opening price, we left that open, unmitigated. So what am I going to look for also during New York? A retracement to that level. So we had a lot of confluence to look for longs. And if I'm looking for longs and I have 10 a.m. high impact news, what am I going to do? Well, at 10 a.m., I'm going to expect a Judas swing. A time-based manipulation that we are going to confirm through SMT, right? So time-based manipulation, right out of the news, we need SMT, and then we look for our entry model since we already have our drawn liquidity, and we can also use these relative equal highs as confluence, that this is a very high probability level as well. So definitely a very clean day on the higher time frames, and now we'll go down to the 1 minute, see what it was all about. So as we discussed, we had 10 a.m. news. So the only time I'll be trading 10 a.m. news if 9:30 a.m. forms a clear Judas swing confirmed with SMT. Now, due to the fact that I was looking for longs, this is nothing, right? Because you had a Judas swing. You had a nice clean Judas swing higher. You also had SMT at this level, which is additional confluence to look for a short. But I was not looking for a short, right? As we just explained, our higher time frame chart told me to go long today. So since I was looking for a long, I would not consider this, but there was a nice unicorn entry right here. If you were trading before news, that would have led to some sort of results, right? If we just look at it a little quickly, you have 3 PD arrays, right? Both order blocks overlapping here, plus the fair value gap. And you could have looked just at a short-term objective. You had some very nice equal lows right here. So, well, that is picture perfect, right? Definitely not waiting for this. And if you were waiting for this, you would have still had a very nice move. But as I said, that was not the move that I was looking for. So the fact that we do a Judas swing higher with SMT just gives me additional context that I have to wait for the news until the full downwards movement is complete, and then I can start looking for longs. And if we look more in depth, we'll notice that right after we got that nice 10 a.m. Judas swing, we had no SMT. Now, if I'm in the 1 minute here, I can probably find a swing point here, and please adjust, thank you. can probably find a swing point here where there is SMT. So just from seeing this swing point comparing to the current price point, did we take it out here? We did take those levels out on NASDAQ, and on ES, are we looking at the same levels? Yes, we did as well. Did we take out the bottom levels too? It seems like we did. Let me just remove this actually. I have the plus button for when I trade on mobile. We did not take out this final level, which is here, right? So they're definitely, which is this level right here, which we also took out. So there is SMT. If we compare 1 minute swing points, then this is a little harder to find. But the truth is, if you were looking for SMT and did not look that far back, you found SMT on both the highs and the lows, which would have been a reason to get off. Where is it? This is a swing point on ES, so I look for it through SMT. There is a lot of divergence in price, and more importantly, SMT on both sides. We know that when there's SMT on both sides of a range, we are consolidating. So what are we waiting for? A raid. We're looking for a clear raid of our current consolidation range, right? More importantly, when is that range going to happen? Well, that raid is going to happen during time macros. So I oftentimes like to look at 1030 for a possible reversal. But since there was SMT on both sides of this range, I would wait all the way to 1050. Now, this is something that we talk about a lot, the 1050 to 1110 macro. And that is where your successful setup, where I would look for a setup and expect it to be successful when there is divergence on both sides of the range. If we look within that macro, first bullish breaker to be formed, this is a little weird because you have a range, then you have a manipulation here, and then you broke the high. But this is not one that's easy to visualize, let's say, but it is a breaker, right? Purely mechanically speaking, this is a breaker. You have a swing low to a swing high, then you have a manipulation. Of course, you dug back deeper, but then you formed that breaker when trading above. So this candle right here is a breaker block. Now, where is your entry to that breaker block? Well, I have a small little guy right here, inversion fair value gap, but even easier, I have this huge fair value gap that we created, right? So that's what I'd be looking to enter on. Looking at this, where would your stop loss be? Well, fair value gap, inversion fair value gap, and order block. So that would stop you out. That's straightforward. So the setup that was possible by waiting correctly, and of course I would not look for a setup after that, it would be too late in my book after almost reaching these highs. The setup that was available, if you waited for the macro, was a loss. Sadly, it happens, especially in conditions like right now. But what if you did not wait, right? So I'm giving, this is the correct way to trade today, would have been a loss. That is the truth, at least for myself, for my model. And the wrong way, let's say you didn't notice this, would have been a win, right? Because you would have looked at the first bullish breaker to form on NASDAQ, which in this case is this one. As soon as we trade above this, we formed a bullish breaker. Let me just check if we formed another through divergence, right? I'm looking at SMT on the lows, which we did not. So this is truly the first breaker to form. And what is your closest in efficiency to that overlaps with that range? Well, it is this fair value gap that we created just the candle before. And if we look right here, you would have entered on this level. 3PD array stop loss rule puts it where? Or fair value gap, order block. Well, actually, that is a loss perfectly to the tick as well. So as you can see, definitely not the most beautiful. It did exactly what it was supposed to do. It just did not do it right. That is the truth. And in these low probability conditions, that's what you expect. You expect price to do exactly what it's supposed to, right? We go back to a 15-minute chart. Beautiful, time-based manipulation. Just didn't have SMT at that point to confirm it. And then went straight to London highs, which is perfect delivery, right? Accumulation, manipulation, distribution, even with a short-term manipulation to head to these lows. So definitely very beautiful in terms of delivery, but once we go down to the 1 minute, the order flow wasn't up to par. to help you out. There was a lot of consolidation, which both opportunities would have stopped you out at this point with very deep, non-needed retracements, if we can say it like that. And there was also SMT at this point in time, right? Which is the reason why you would gotten stopped out on this first try. Other than this, am I going to consider any sorts of other trade? I could look for a lunge rate. Why? Because my objective has now been met, right? We had our equal highs and London highs. This was my drawn liquidity. So after that drawn liquidity, I can firm retracements lower, right? The retracement of the daily close. On a day with a decent range, it is framework enough. So what am I looking for? I'm trading the PM session. Well, I'm looking at the range from noon to 1:30. Let's bring that over. Noon to 1:30 right here. There we go. So I'm looking at that range. What am I looking for? Right at the start of the PM session, I'm looking for us to take out one side of that range to then go target the other. Very simple framework, right? We took out that side. That's our London high right here. We have our equal highs above. We have all the levels we were looking to hit have now been reached, right? So that is my reason to be ready to go short. And at that point in time, what am I waiting for? A bearish breaker to form. Where is the first bearish breaker? I thought I saw one in here, but there is no bearish breaker that formed in here, actually. I thought we were going to be looking at a stop loss. I'm filtering through all of this to look, because as soon as we take this out, I now have my reason to go short. So all I'm waiting for is an entry model, right? Which for me is a breaker block with an overlapping inefficiency. And the first bearish breaker to form, if I'm not mistaken, would be this one. And it's funny because you're like, oh, you just picked and choose the first one that worked. No, I just picked and choose the first one that formed, right? I'm looking for a very specific pattern. In the case of a bearish breaker, I need a range to form, the heights to be taken, and then us breaking the lows. We did do the first part of the pattern, but we never broke back below the lows, right? I'm looking here. I'm looking here as well, where we took it out. We didn't break the lows. And then the first overlapping PDRA at this point in time, no inversion fair value gaps closed. So it would be indeed this fair value gap that once again, we formed the breaker block right here and then traded right back into that fair value gap. The only difference from the morning setup we just looked at is that this time it worked. And if we look at your 3 PDRA stop loss rule, is this an inversion? Well, even if it is, it wasn't validated, so you can't use it. You have fair value gap, you have your order block right here, and then is there SMT on that swing point? Yes, there is. There is SMT here, divergence. I'm not going to draw it with any precision in this point, which, as we said, right, when there's divergence on a swing point, I count this into my stop loss. But this is something that I've actually not reminded for a while. So let's just imagine your stop loss was all the way up here. So you use fair value gap, order block, did not see the SMT, and we're waiting all the way there. If that was your stop, where would you target? Well, we already know my target is going to be London lows here. Does this mean I'm not looking for a take profit along the way, a low-hanging fruit objective? Never, right? The RISE model has 2 specific take profits. And then, of course, as I always say, I like to leave a runner on. But there are 2 levels where you're allowed to take money out. Premium and discount of the latest expansion range, 5-minute chart. Where am I going to take my take profits? Well, first, discount and efficiency. In this case, it would be liquidity, which is still internal range liquidity. And that would be not my target, my partial objective on the way to the lunch lows. I would anticipate us to reach the lunch lows. And if we look on an intraday time frame, I would look for us to retrace into, oh, well, see now the liquidity that lines up beautifully with the 50-minute order block. I love it. I would use the daily range and anticipate that if we are going to retrace lower and continue, we're going to reach for, once again, the first discount and efficiency, which in this case is this 15-minute fair value gap. So I would be anticipating more move lower than what we saw. And that's why you have a partial. That's why you pay the trader along the way in case you're wrong. Because what you were saying is we're going to reach for that level. We did not. I still made money though. I still took out 50% or more. I like to go for more even. I take 75%, sometimes even 80%, depending on, of course, my number of contracts, right? It's not always a round number of my position at my partial. That's my base hit. And in this case, if you took out even just half, you made 1.3 R. And then your stop goes to break even. You got stopped out break even right after? Who cares? You made 1.3 R, 1.325 in this case. And you close your day on this, right? You're risking $500 on one prop firm challenge, and you made, I should have used an easy number like $1,000, but you made what, 7 something? You made 1.3 R, so you made 650 or something, right? I'm rounding because I'm too tired to do mental calculations. But you had a nice partial, and of course this time it did not reach your final objective. You also, just looking at it, I'm looking at this range, and if we use our standard deviations, beautiful confluence for that partial as a large objective, right? So I would definitely be looking for this. And to be honest, in cases like these, after I partial, on days where we already expanded higher and I'm trading a retracement, I like to trail my stop loss aggressively. What does that mean? Well, I wait for us to form a swing point inside an inefficiency. It's that simple. For example, this swing high has been formed inside a fair value gap. That would be my stop. Well, after I take profit, right? So I'm not talking about this trade, just in general. That would be a place where I would like to place my stop loss. And then every single time, I'm just waiting for us to create a swing point inside an inefficiency. Swing point, inversion fair value gap to the left. Once again, that would be a place where I would trail my stop. Right here, swing point inside an order block. Once again, I'd like to trail my stop here. I trail it down right here right after. Once again here, right? Swing point inside that fair value gap. I would trail here. Once again here, swing point inside that fair value gap. So even if I held on the whole way and trailed my stop loss very aggressively, I gotten stopped out there. What I just said is logic that one of my trading bots utilizes. So yeah, giving you guys a little Christmas present there. And it's going to be on YouTube, but I don't anticipate a lot of people watching this one just before the holidays. Well, I hope not. You guys should enjoy your time with your families. Do we have any questions, right? We looked at a morning long, 2 morning longs actually, that just did not work out, with a nice little PM short that could have worked out pretty nice. If you see the news, consumer confidence is going back to red folder from 2025. Awesome. Cool. I had not seen it. I don't like to follow up with too many things. Follow up on what's important. I don't want Forex Factory to be taking room in my head. But it's good that it's turning back to a red folder because that's how I treat it. So I'm quite happy to see consumer confidence being switched back to red folder on Forex Factory. But as I told you, Justin, right, once I add news data to the Right Statistics app, I'm not even going to be using that platform anymore. Do we have any other questions overall? Definitely a CompTIA review, a quick one tonight, but we're heading over to Christmas. I'm still going to be active in Discord, but I won't be trading and won't be looking at charts almost at all from now until at least the start of January, but I won't be trading until January 6th. I wish you all the best of days. Happy holidays sounds bad. Merry holidays, I guess. You guys have great holidays is what I'm trying to say. Enjoy Christmas. Enjoy time with your families. I hope that's what you're doing with it. And we'll see each other back soon enough. The markets aren't going anywhere. You're doing this for freedom of time, right? But you have to enjoy that time. So you guys have a great time for the holidays, and we'll see each other back soon. Bye, guys. Have a great night.